Okay guys, welcome back again. It's still your boy, the Legend FS Academy, and again we are back again on another week. Hopefully, we are hoping that the week will play out positively. First and foremost, we need without wasting much of our time, we just need to kick off immediately because I don't want this video to be too long. First, we are starting off from the DXY. Currently, we'll be analyzing DXY, AUDUSD. And AUDUSD, I will be using a key technical tools to analyze AUDUSD for you guys because I did reanalyze AUDUSD and I found out these key technical tools that are aligned together in AUDUSD. So I will be using what we call Fibonacci, trend line, support and resistance. Those are the three technical tools that I will be using to analyze AUDUSD so that you can get more insight. Should in case you are not able to watch, please try to watch the part at which I analyze the AUDUSD before you skip the video. So with that being said, first we can see that on DXY is still pointing down because DXY control the market. You can see I've done my analysis on DXY. I wouldn't want to delete it so that the video will not be too long. So I've done my analysis on DXY, and you know most of people don't really like to trade DXY like I do, but I use it to measure the market, the strength of the market. DXY is the benchmark of other pairs. Once DXY is down, best believe that other pair will be rallying, will be going up. So DXY is still pointing down. That is what we just need to do. I've done my analysis on yesterday. I've checked everything. So I just want to show you guys that this is what we have. DXY is still going down. So with that being said, secondly, we have to dive into AUDUSD. As you can see, this is my real chart on AUDUSD. I've done everything, but let's quickly dive into a new chart so that we can do this together so that you will know your stand on AUDUSD. First, we have to go to weekly. We've seen that I've done this analysis before, but this is just a quick one. We've seen the structure of AUDUSD. Let's quickly just bring out our zone. Let's just tap our zone, bring out our zone here. Let me just pick one zone from here. This is my first zone from here. Now I'm okay. Let me quickly go back to weekly. Now let's analyze properly. First, let me draw my counter trend, my trend line, I mean to say. This is my trend line first. Okay, let me make it. Let me get another one to the upside. Okay, this is our trend line, although it will not be perfect as the one I did, but I'm just doing this because of this tutorial's sake. So this is our trend line on weekly. There's another thing that caught my attention yesterday as I was analyzing. I found out that there was this high has been broken to the upside. There was a high here. When we get to weekly, you will see it clearly. This high has been broken to the upside, and what I'm expecting next is a pullback, a decent pullback to that particular high to confirm this particular, because there is a double bottom here, but the double bottom is obvious on the daily time frame. So I need a pullback to something like this or to this particular trend line, and inside there is a fib zone of 0.5 and 0.6 Fibonacci zone. So if I can see a pullback somewhere here, depending on the strength of the market, then I will be targeting this particular zone here. But let's quickly go over to the weekly so that you can see it. Daily, I mean to say. You see, now this is we can clone this to make it as a zone. You know, this is not a line, but I like using line. But if you have been also watching my video, you know I also make it to look like a zone so that for newbies to really know that this is not just a line, it's a zone. You can make it as a zone. So now this market has given us this formation. It has given us this formation here. The market was initially coming down. It gave us this formation, which is the W pattern formation. Initially, it was not able to take off the neck, but later on, it gathered another strength here and took off the neck. So now, since it took off, there is no proper retest. There's no proper retest. So I'm waiting for a proper retest. I'm waiting for a proper retest somewhere here, so that I can go long, and when I go long, I know for a fact that this particular trend line will be taken out, but not until yet. Until then,
So now this is what I found out yesterday when I was really analyzing. Then I went back to weekly again. I can see that the market has been going up. The formation of the market has been in an higher high and higher low, which is the sign of a strong bearish, a bullish market. I mean to say, the market has been moving this way. It made a higher, although it was not able to surpass it neatly, but later on it surpassed it. So we'll be waiting for a pullback to this particular zone here and a shoot up. So this is what we'll be waiting for. Let me quickly go back to daily. Daily, you can see that the double top, the double bottom is obvious here. Then we can now say, okay, where are we going to put our fib zone? Let's quickly make this this line here so that we will know where to put our fib zone when we get to 4 hour, because I want to get the fib zone from 4 hour, because 4 hour is where I take my trade, and most swing trader is 4 hour is where they take that trade. That is why I want to pull up my fib zone from here. Okay, this is where I would likely want to pull my fib zone from swing low here. This is where the move started from here. This is where the move started from. So now let me bring out my fib zone, Fibonacci retracement zone, from swing low here to where the market stopped. You know, Fibonacci is from the swing low to swing high. Let's go back to daily so that you can see it properly. This is where the market started from. This particular zone here is where the market started from. I can choose to take this one, but as a swing trader, I pick this particular zone where the market started moving from swing low to swing high. From swing low to where the market stopped. That is how you get your Fibonacci. So I've gotten my Fibonacci. Let's quickly let's get our trend line to see that a lot of confluences is aligning there. Let me delete the Fibonacci so that you can be able to understand it bit by bit. If it's only this video you watch and you skip, I will be glad. Let's quickly get our trend line again. Trend line from here. Let's check if we can be able to have a perfect trend line here. From here. Okay, let's extend it. It's perfect now. From this first touch, we have a second touch here. So ideally, this trend line, we still want the market to come and touch it, at least to come and touch it, and if the market comes back to that particular trend line, that will be a very nice setup, because we have a lot of confluences here. I'll be waiting for this market at least to come back to this neck. You know, from the daily and from the weekly standpoint, the neck has not been tested, and you know the principle of chart pattern states that whenever a chart pattern, whenever the neck is broken, best believe that that is number one, confirm that the neck has been broken, and secondly, it need to retest that particular neck for it to be valid. So it has broken. On 4 hours it has been tested, but on daily it has not, and on weekly it has not. And you know that the higher time frame override the lowest time frame. So best believe that the market will surely come back on daily to come and test this particular zone here. So that is why I'm keeping my eyes on this particular guy. I'm not saying it's going to come back. You know how I say it. I always give it 50-50, but this is what I'm keeping on my chart, that if, for example, if the market is bleeding massively, I wouldn't be surprised, because I have my daily zone intact to cater for the downtrend. So that is how I always prepare for the week ahead. I prepared yesterday, so I say, okay, let me show you guys what I've done. So now this is my trend line here. Let me get my Fibonacci now. Fib zone from swing low here to where the market stop. This is where the market stop. Now watch closely. You can see that inside this 0.5, this is 0.5, this is 0.6, this is 0.328. Inside here is where I'm expecting this market to come into. But if you're a day trader, you can as well pick your swing fib zone from this recent swing low. Then you then you drop it. You can see that if you whichever one you pick, whichever zone you pick, is still aligned there. If you pick this particular zone here, it's still 0.5 still somewhere here, 0.6 still somewhere here, it's still aligned. And when this guy finally comes to this particular trend line here, I know the chart looks a bit is not clean, but it's just for tutorial sake. Whenever this guy get to this particular zone here, we have trend line. and 0.5 is aligning with the trend line, and again Fibonacci zone and trend line. That is a high confluences area for you to take a buy. So now let me quickly delete everything so that my chart will look clean first, but I don't like my chart to look dirty. So now you can see that, let me go back to daily. So this is what I have done on daily. You can see it's just only lines, not much indicator. You can see if we can be able to take off this particular zone here, then next target is this particular zone. So that is all. That is it about AUDUSD. You have to wait patiently. For now, we know that DXY is still shooting down, and when DXY is shooting down, we know that GBPUSD up, EURUSD up, AUDUSD up. So we still have to be patient for us to wait until this guy comes back. There must be a pullback. There must be a pullback. The market cannot just keep on rallying. If we have a decent pullback to this particular neckline, which has not been confirmed, this particular neckline here, if you have a decent pullback with this trend line, a nice pullback with this trend line, with this Fibonacci zone on 4 hour, you look for what I call a chart pattern. Because I always say it here, when the market is coming down, the market will be making lower low, lower high, which is a temporary downtrend. So when you want to trade it, you have to wait for, maybe if the market comes like this, the market is just giving you this formation, a temporarily downtrend. So what you have to do is that when the market get to this particular zone here, it might dip down. Note, I always say, don't trade on a support or in a resistance zone. Those areas are manipulation zones. They are not reliable. What intend to happen is that when the market gets here, it tends to behave like it wants to go up. Then it will give you this kind of thing. Then it will not trap a lot of early buyers. Then it will not deep down. Once the market deep down, the early buyers, their stop losses, they are just below maybe a candlestick or a small chart pattern on 15 minutes. They will not dip it down like this. Once they dip it down, this is when they will not move it up. So as a smart trader, you want to wait for a stop loss run to happen somewhere here before you can take a buy. But on the other hand, the AUDUSD might not also get here. It might stop somewhere here. But for me, this is what I'll be waiting for. They always balance the equation to 50-50. 50% of the time, I'm looking for AUDUSD to come down to where I've wanted him to come. The 50% is that anything can happen. So I give room for anything can happen. So that is it about AUDUSD. Let me quickly show you my own analysis, which I've done. This is the raw form which I just showed you. Let me quickly show you my own analysis, which I've done. This is my analysis which I've done yesterday. Yesterday, you know, as a swing trader, you do your analysis maybe once in a week or twice in a week. You are not a day trader. So I've done my analysis, and this is exactly what I'm waiting for. This is what I showed you guys. This is exactly what I'm waiting for. I want AUDUSD at least to come down to this particular trend line. You see that is the same thing. I will also be updating you guys as a post, as a post on my YouTube channel. Whenever this setup plays out, do well to check out for it whenever it wants to play out, because I may not be able to do another video to show, but I will also be posting it on my post handle. So enough of AUDUSD. Let's quickly head over to GBPUSD. As we know, we've checked DXY. We've known that DXY is coming down, and GBPUSD also, I've done my analysis. No need to redo the analysis again. I've done it, and you guys know that we are still waiting for this particular zone here. Although GBPUSD is giving us a strength, there is a particular saying that said you should look out for how a market move to a particular support or a resistance zone. I think I have to redo that video again for you to know when there's a momentum in the market, when the market is approaching a particular resistance. If the market, what you have to look out for, there are two scenarios there. If the market just move with a, let's say the market just move with this kind of formation. Let's say the market just move like this. Oh, let me delete this. This is not what I want. Okay, let's say the market move like this to resistance zone. If the market move like this to a resistance zone, what the market is telling us is that I may not be able to surpass the resistance zone. Because why? there is no the bulls and the bear were not just dragging. The bull just take over and get to resistance. So that interprets to us that a lot of sellers are not willing to drag with the buyers. They are just waiting for this resistance for it to be taken out. So in a situation where we have market moving like this, I will have to do another video for that. In a situation where we have market moving like this, very closely pulling back at a close range, moving like this to a particular resistance zone, best believe 70% of the time that resistance zone will be taken out, and that is what is happening on GBPUSD at the moment. This formation tells us that the bulls and the bear were dragging. At any given point in time, the bulls want to buy. At any given point in time, the sellers wants to sell. But the strength of the bulls are overpowering the strength of the bears, and that is why you are seeing the market keep on making higher high to the resistance zone. Whenever you see this, best believe that 70% of the time that resistance will be taken out, and that is what is happening on GBPUSD currently at the moment. You can see that the market is just closing spaces, and it has been attending this particular resistance zone. Once we take off this particular resistance zone, we are good. Although currently I'm not on trade on GBPUSD, but I'm on trade on USDCHF. So once we take out this particular resistance, the next zone will be here. Once we take out this one, the next zone will be this particular zone here. Everything is just done. You can look at my chart and do yours like this. So that is about GBPUSD. Let me quickly dive into USDCHF. This particular trade, I'm on this particular trade, and this is opposite of DXY. When DXY is up, if you check this chart, is opposite of DXY. I've also done my analysis on this particular zone here. This particular zone is also a good zone for you to enter. If you want to enter, stop loss can come above this particular wick. If you want to enter, then the target is this particular first target will come here. Then second target will also come here. But until then, let's get to first target first. And you know that if you check this formation now, is the same as DXY. So that is why I'm targeting my first target here. DXY also, if you check it, it's still the same thing with DXY. The same thing with DXY. So that is why I said I'll be taking my first target. You can see as DXY is falling, the logical place for us to place our TP is somewhere here. This is a logical place for us to place our TP here, and that is the same with USDCHF. Currently I'm in the trade. So another logical place for you to place your stop loss is somewhere here also, because it's the same thing as DXY. DXY is a flip upside down for USDCHF. So if you want to enter this trade now as a swing trader, you can still enter, because the formation I'm seeing here now, this candle, the inner one closes as doji candle. Then we have, if this 4-hour candle that is forming close bearish, that will be another sign for us, and it will be a double top for us, which I like to use. This is a double top for us. The market move like this from here. Now the market give us this formation. This is a double top formation. If it can close, if 4-hour can close bearish, this is another double top formation, but in a trickish way. A double top in a trickish way. I've said it before. So you can also wait for 4-hour to close before you hop in. So this is what I have for you guys, a quick one. I know the video already is getting to 20 minutes, but it's just a quick one. And please, if you like the way I teach, do give me a thumbs up. And if you don't also like it, give me a dislike, but tell me in the comment box below what to do to improve in my next video. As you all know, nobody knows it all. I'm here to learn. You are here to learn. You learn from me. I learn from you until we attain the level which I call the CPT, consistent profitable trader. I'm not totally there yet, and I know a lot of newbies are not totally there yet. Why not give me a subscribe and let's grind together until I see you again middle of this week, when I will come up with another super educative video. Bye for now. I remain your boy, the Legend FS Academy. Please subscribe to my YouTube channel. I will really appreciate that. Bye.